This is the YouTube video that I mentioned earlier on. The title is Potential Sharp Move Coming According to this Bear Market Leading Indicator. That was on 9th of May 2022. 2022 it was a bear market and it's halfway of the bear market at that time. During that time, I used this bearish leading indicator by comparing the analog S&P 500 together with the Russell 2000. Russell 2000 has been leading for a while, from 18 onwards here to around October. We noticed that there was failure. I already annotate this. Compare this to this same date. The structure for the S&P 500 attempt to break out uptrust, but after this breakout attempt, it obviously did not get above and commit above. But if you look at the Russell 2000, there was a failure show up. This is a sign of strength rally, backing up action, and is pending moving out and to trend in phase E. Suddenly, there was a failure show up. This failure leading to a downswing and an inability to rally, and followed by another downswing, and then forming this distribution. This is attempt to break out while we already have a failure show up in Russell 2000. After that, while Russell show up as a bearish breakdown bar here, this one, S&P 500, show as a failure bar. Fail and then break below this localized range and then back into this support level. Russell 2000 here lead the way down. Here is a redistribution. Compare this annotation in gold color. While the S&P 500 was testing the support level, attempt to bounce up, Russell 2000 already break down and show inability to rally, struggle to climb back up. These are the telltale signs that Russell 2000 lead the way down. After a few more days, we noticed that S&P 500 follow through and have a breakdown and have a quick shakeout. This is also another shakeout and followed by a V-shaped recovery and then get back into the range. That is what happened in 2019. In 2022, S&P 500 has been leading, forming a up channel, high low throughout. Russell 2000 stuck within this trading range for quite a while. While Russell 2000 break out and we see that there is short-term commitment forming this flagging and then failure and also selling on the way down. There is increasing of the supply here, selling on the way down. However, S&P 500 holding up the gain. That's one near the end of 2021, roughly around December, it forming a topping range, uptrust, breakdown, sign of weakness, automatic rally. Again, Russell 2000 leads the way down back in November, have this sign of weakness, inability to rally or automatic rally, and then form this redistribution. Here is another trading range compared to Russell 2000. Here, we have similar structure with the uptrust after distribution. This is a temporary commitment above the swing high level. And the area that I would like to draw your attention to is here. While S&P 500 have the downswing, coming back to test this previous swing low level, swing low support, Russell 2000 struggle to get back up. We have a breakdown and an inability to rally. Please take this access line or the access zone as the resistance level rather than S&P 500 as a support. Again, Russell 2000 leads the way down, forming the breakdown structure before S&P 500. That's why this is also a similar analog from 2019. And what happened next is we have a breakdown and then go down to 3008 or 3700 or 600. Now we have 2025 January. S&P 500 versus the Russell 2000. Russell 2000 has been a laggard. That's a trading range, attempt to break out, coming back, attempt to break out. That's quite a nice breakout and attempt to hold up, but here is different story, different channel. We have high low structures throughout, and until December, that's here, the change of character bar show up. This big bearish bar that changed everything, where we also discussed this a month ago. The important thing that we need to analyze is the election bar. 7th of November, here is the bullish bar that flipping everything to the upside. In S&P 500, it shows up as a breakout bar and then kickstart the momentum. In Russell 2000, we also have this super bullish momentum bar. This change of character bar in Russell 2000, break below and commit below in one bar. That's also the first sign. While S&P 500, here is the election bar and this change of character bar hitting this level and bounce back up. It shows quite a lot of the strength compared to the Russell 2000. While Russell 2000 given a few opportunities for it to reclaim above this access line, which is 2300. The first attempt shows very weak rally, not even into one half of this change of character bar. Second attempt also got rejection right here. Suggests that there's people selling right even at about one half of this change of character bar at about 2300 at this level. And again, recently on this bar, that's Friday's bar, we also show this breakdown bar. And if we extend this, it's also another level, 2220 or 2225 as a minor support level. We also show that as a breakdown bar. Once again, Russell 2000 leads the way down. It could easily have a shakeout type structure. It could still attempt to rally for a few more days. Once it's give up, we should see some acceleration to the downside and come back down to test this level, 2100 to about 2000. This is the immediate support zone. Imagine that if it breaks below this support level, that structure looks like head and shoulder. There's a shoulder, there's head, that's a shoulder. If it breaks down, break below 2000. If it undercut 2000, we could also have big shakeout and then get back up, forming a bigger range. In short, this could be another bigger structure. We have the trading range, breakout, but the whole thing here become the uptrust, the temporary commitment above the swing high level. Once it's break back below, show inability to rally up, get back above, then it's likely going back to test the swing low support. Or in this is likely a trading range. While S&P 500 could be doing the same thing. This is the access line, the support level. So if it breaks down, breaks below, we should also see some acceleration to the downside. Coming back to test, there's a minor level somewhere around 5600 or even to about 55 or 54. Previously, here is the range. We show some breakout, get back up, come back to test, and then go back up. But once this election bar is violated, this is going to be another downswing, coming back to test some support level. This move down is slightly a shakeout movement. That's purely based on this analog from using the Russell 2000. We talked about on Monday attempt to rally up, but showing some rejection tail. However, it's essential to monitor if there's any follow through to the downside. On Tuesday, immediately we have this act as a reversal bar. Supply is quite consistent. Relatively high supply level, consistent supply still show up. And after that, there is a breakdown bar here. That's on Friday. Friday show up as a breakdown bar with localized increase of the volume. Supply has been increasing. Attempt to take out the swing low here. That's happened on yesterday, Monday. Another thing to watch out for is first, we have this change of character bar. By far, this is the largest bar that we have ever seen in 2024. The largest bar that we have ever seen. And subsequently, attempt to rally. Here is another attempt to rally, and notice that the rally is getting smaller and smaller. When it break below the support level, here is another attempt to rally. Yesterday, showing some demand tail, or we call this a hammer attempt to rally. We should see some form of the rally attempt. Because of this rally attempt, already show up as a tail, as a hammer, and also reflected in the market breadth as oversold. Every time it hit an oversold, we should see a rally attempt. If this time it failed to even manage to commit above the high on a Friday's bar, let me get the value. That's somewhere around 5960. If it failed to get above 5960, that's the level, that's the immediate resistance level, then likely we should see some quick move to the downside, take out this support level, and even this 5800 level. Because the key bar here is still the election bar. We have this change of character bar, tested the election bar first time, bounced back up. Second time, tested this election bar, bounced back out again, but look at the bounce. Look at the rally. It's getting weaker. And the third time, Friday's bar already showed penetration, commit below. That's not a good sign. Next level will be on 5800. This is the axis line, respected a few times, acted as a resistance. Once it's broken out, come back, have a test as support here. Second time as another support. 100 is also another level to watch out for. If it breaks down below, we should see a quick movement down. 56 or 5500, or even the worst case will go all the way to somewhere around here. This is 100 and below. That's the zone. Based on the analog compare with the Russell 2000, we could anticipate a deterioration of the index and also quick move down, because Russell already showed the weakness and also leading the way down. However, on the bullish case, in order to violate that bearish analog, we still need to see at least a break above. First, this is the high of the bar 59, say 60, and then quickly rally away and get above 6100. This is the first level that you need to commit above in order to violate that bearish scenario. If it fails to commit above, still struggle to get back up, hover here, then chances for it to break down is high, and then to push it downwards and to test further support level. Supply is still quite consistent here, although there's decreasing of the supply compared to the first move down, but here there's still a lot of the volatility. And because the quality of the rally is still not good and still quite weak, suggests that there isn't a lot of the aggressive demand or the quality demand to come in at this point. We are still waiting for those type of the quality demand. If we get a capitulation situation, means a breakdown and then quick move to the downside, the value buyer should step in, and some scalpers, some trend followers, or the mean reversal traders should get back in, and we should see some strong move to the upside. That could present a nice opportunity, because something like this before, quick move to the downside, get back up, and then followed by a test. But here, because this is already quite extensive, once it's breakdown, we should see something bigger, unlike this. the trading range should be a lot bigger. However, that should present another great opportunities once we have that kind of the shakeup. Here is still a long-term uptrend started here. Breakout here with an uptrend, up channel, up channel. Here is also another up channel. And recently, this channel has been broken. Suggests that the uptrend should come to an end, going into a trading range. But the trading range is likely a first move down and then an automatic ready to bounce up.